In this video, guys, we are going to look at volume and its role in good trade setups. Stay tuned. Hey traders, warm welcome to you. Thank you for joining me. All right, so volume is a really key part of a lot of trading setups. We're going to look at a moment, kind of a graph with a few different traditional trade setups, or setups that kind of we take for granted and we take day to day, but how volume might play a role in it. Now, listen, I think that, volume can be interpreted in one of many ways. Some people like to look at it as a real must-have. If you haven't got volume, you want to take it. Some people like to use it as an additional weight, and I'm in that camp. I like to see certain things with volume. It's not a be-all and end-all for me, but there's certain things I like to see. But some setups are a little bit more weighted to having the volume component than others, and some people don't care about volume. Now, appreciate that if you're trading some instruments, FX is a great example, you're getting an aggregate volume. So many of the charting providers will provide you with volume, and that's going to be perhaps from one broker or another, but that's good enough. It's not going to be the same as, let's say, volume on a specific stock and it's all done on one central exchange, or volume on a futures contract all done on one central exchange, but it's generally close enough. So we don't have to kind of split hairs too much with that one. Anyway, I've got a chart here, a typical standard chart, and we'll go through some bits and pieces and look at kind of how I think volume is best interpreted. So this is we've got a graph here, stuff going on here, and below it we've got this volume histogram, which most people like to have. Now, for me, the important thing is, when we're trading and looking at volume, is not necessarily absolute number, but the difference and the change. That's the key part in volume. It's not the absolute number so much, it's when you're comparing it to other things, because the consistent level, or the average level, if you like, is 1, and that can be, could be 10, could be a million, could be 1. That's what it is. But it's then what happens after that. Is it reduced? Is it increased? And it's also what the volume is doing under specific circumstances. So if we look at this chart, and we imagine that this here is a breakout. So our volume is kind of tending to be that kind of level. It's sitting whatever level that is. As we start to get a breakout, we want to see more volume coming in. Why do we want to see more volume coming in? Because we want to see more people participating in that move. Now, for every buyer there is a seller, but more volume would indicate that there's more people who are interested in buying that breakout. Not always the case, and there's an argument to say, well, there might be people selling the breakout. Well, of course it's both, but if you have an increase in price, an aggressor, i.e. the buyer, and you have volume, your assumption is, which is reasonably valid, that the person who is paying higher and higher is a person who's prepared to do more and more business. So, and more volume as a consequence. So when you get a spike up in volume here with a breakout, that adds more weight to the breakout. Doesn't mean the breakout is going to hold, not always, because sometimes it stops getting pinged. But when you have persistency of volume after the breakout, that's a key thing. So you don't want it tailing off too quickly. You want to see strength, 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 preferably with continued move. So you break out, you strength, 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 volume still pushing, 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 pushing. Then when you get the decrease in volume, so again, we're coming back down here to a decrease, and again, we're using it relative. So we're seeing, is it decreased relative to the breakout volume? Yes, it is. Okay. Now, when we're digesting in this digestion zone, or even pulling back very slightly, if we were looking at this, we have a decrease in volume. So indicating that perhaps there's not many participants. People are backing off a little bit and saying, let's just see what happens to price. They're not considering it as great value and selling it. And so the little decline in volume is just indicating, hey, participants are just relaxing. The market's just backfilling. It's just normal structure as part of the trade. And then when we get an explosion again, we get a spike in volume one more time, and a persistency of high volume as we're up in this level. But then you go look at these kind of things, guys. So that's little chunks of volume. So on your chart, you're looking at chunks. So you're chunking it on the breakout, you're chunking it on the consolidation, you're chunking it again on the breakout. Now, there's another way that you can add some value to volume, is when you can look at individual bars. So, for example, let's imagine this bit here, right? This bit here is a classical push to highs, push back to highs, breaking down, a reversal pattern. You would probably suggest that that's going to potentially reverse, or if you're using classical technical analysis, you might call that head and shoulders, you might call that all sorts of different things. But the point is, you're now wanting to look what's happened here on that spike. And when you go to your chart and you see that actually maybe the spike was you've had these volumes, these volumes, these volumes, and maybe the participation wasn't quite as much as it should be. Maybe you didn't get, and that you had before. Again, it's all relative. But so if before you've seen breakouts with volume, and now you see a breakout with not much volume, and then the next day, on the days here, you're seeing higher volume, higher volume, higher volume, that could be an indicator that people aren't that interested in that breakout. There wasn't much participation in it. We didn't really get a lot of people buying that new fresh level, indicated by this single volume histogram number here, or however you're plotting it. I'm using a histogram here for illustration purposes. Hey, we're not getting as much volume. Oh, interesting. And a lot of people call that a volume divergence, but that's by the by. The fact they've got a new price and then not a new increase in volume when you've already seen it. That's the trick, guys, is to see, you know, you can't just take that as a binary event. You have to look and say, well, have we seen increase in volume breakouts before in this market? Yes, we have. So that's the normality. Now let's look and see if we continue that. No, we don't. We get a breakout. We don't get fresh volume coming into it, or don't get increased volume coming into it. But then the next day, the next day, the next day, the volume picks up. On the downside, okay, things might have changed. Maybe people now are being more aggressive on the downside. Of course, when you see that, then you can start to potentially have some more validity to that reversal pattern. Or if you're long, you might want to consider selling the trade and coming out of the trade. So volume, key things, guys, is relative volume. So you want to see how the volume is compared to previous moves. So when you've seen expansion in volume, is it a lot of expansion compared to how it was before it broke out? How does it behave at key levels? That's the sweet spot as well. So when we're in fresh territory, like we said, when it's backfilling and consolidating after fresh territory here, how does it behave? And then again, how does it behave at key levels from the other side of the coin? So if it's going to a new high, you're not getting the spike in volume, but then you're getting the spike in volume on the reversal, that might be a warning sign. So it's a little bit of there's a bit of an art there as well as a science. So you have some basic rules, but again, as with many things, guys, you're kind of looking and seeing how it compares to previous normality. And if it's an unusual, hey, it's a huge volume spike, huge highs, big things, that indicates as much more weight to the move. Potentially, you've always got to keep your risk managed, guys. Just because there's volume there doesn't mean it can't just turn on a dime the next day. Of course it can. But it just adds a little bit more credibility to various setups when you put it in context. All right, guys, that's volume. That's how does it play a role in your trading setups. Keep your risk managed. As always with any of these things, that's the sweet spot. Take care. Bye-bye.